Lowe's just reported a decline in Q3 same-store sales. A weak housing market, still high interest rates have cut some spending on home improvement. But the company did raise its sales forecast for the year. Our guest is neutral on Lowe's stock. He does prefer Home Depot. Let's talk now to Seth Basham, Managing Director of Equity Research at Wedbush. Thank you very much indeed for coming on the show, Seth.
Thanks for having me.
Start off with Lowe's. Talk about the latest quarter, if you would. They are still optimistic on sales, but why did they see a drop in comp sales in the latest 3 months?
Yeah, comparable store sales were down about 1% in the quarter. This is an improvement from the trend we saw in the first half of the year, but still down, obviously. And there are a couple of things that are really driving that number down. The biggest one of which is their do-it-yourself business, DIY, was down about mid-single digits by our calculation. And it's because homeowners are continuing to defer larger ticket projects. Think about kitchen and bath and flooring remodels. All those types of projects are not being done very frequently, and it's weighing on their sales materially.
If you had to compare Lowe's and Home Depot, what is the big difference between the two companies right now in terms of the customers they deal with or the products they sell?
Yeah, so you have higher exposure to that DIY customer for Lowe's. It's about 75% of their sales versus being only about 45% for Home Depot. The other portion of the business is in the pro, so serving contractors who do work on homes on behalf of homeowners. And that side of the business is doing better for both companies. But because Home Depot has higher exposure there, they're outperforming Lowe's, generally speaking. And when I say generally speaking, I'm talking on a multi-year comparable store sales trend basis. One of the key differentiators in the pro business for Home Depot is their service of the larger, more complex pro, which is doing quite well. That's not to say that the pro business for Lowe's is not doing well. That's actually up high single digits positively, and they serve primarily small and mid-sized pros. That being said, it's all about that DIY segment where Home Depot is outperforming Lowe's, and that's really driving the big difference between the two companies.
So your preference would be Home Depot. You think these trends will continue? You have a buy on HD?
Yeah, that's right. We continue to like Home Depot. We think they're outperforming on the core DIY side. At the same time, their complex pro initiatives are taking hold. And as this cycle eventually turns for the better, we think the professional side of the industry is going to perform better coming out of the gates. And so that favors Home Depot's fundamental same-store sales trends and operating leverage in the business accordingly.
I remember during the pandemic, things were short across the economy, including things such as garage doors, and that held up construction projects. Have Lowe's and Home Depot been hurt by supply shortages?
Supply shortages have not been an issue recently. In fact, most products are very well supplied at this point in time. There have been some disruptions in the Red Sea. About 40% of the goods they sell are imported. There are concerns around tariffs going forward, but not so much supply issues.
What about international expansion? Can you just remind me, are Lowe's and Home Depot, generally speaking, very focused on the U.S. market? I mean, obviously, Home Depot has lots of stores here in Canada.
Right. So Lowe's sold its Canadian business in 2022. It also sold its Mexican business. So it's very focused on the U.S. Home Depot still has exposure in Canada and in Mexico. The company is adding a handful of stores per year across its network, but growth is not the focus of either company, and certainly the U.S. business is at the core for both companies.
It's interesting that Lowe's turned its back on Mexico. I mean, that's a growing economy, but I guess they just couldn't make it work in that country, or it wasn't worth the return on capital wasn't there.
Yeah, that's exactly right. And if you go back to Canada, they acquired that business probably about 6-7 years ago now,
Sure.
And they weren't able to make it work, leading to the sale in 2022. And that was under the current and CEO Marvin Ellison, and one of his objectives when he came on board probably about 5 years ago now was to simplify the business, focus on those U.S. stores, focus on that pro customer, and he's made strides there for sure, but he's leaving some growth off the table.
And earnings for these two companies, are they generally linked to housing sales in that when people buy a new house, there's always work to be done? Is that an important driver of their sales, volume in the housing transactions?
Existing home sales volume certainly is a driver for these guys. Even more importantly is home price appreciation. And we've certainly seen home prices appreciate greatly over the last 5 years since the pandemic. That being said, a lot of homeowner equity is locked up in those homes with high interest rates, and they're not leveraging that equity to do those bigger ticket home improvement projects. So once interest rates come down, I think it's going to help on two fronts. One, unlocking some of that equity, and two, driving existing home sales higher, and the activity associated with that will lead to more home improvement projects.